I like this point. This is from one of my subscribers. One of my subscribers recently mentioned, hey Ian, I hear what you're saying about real estate investment trusts, because I've hinted at this in some of my comments in my other videos. But he said, I really like these real estate investment trusts because some of them pay dividends on a monthly basis. And that's pretty rare to get a dividend on a monthly basis. And what's great about it is it gives my wife and I a little bit of capital each month that we can invest. We can reinvest the dividends. It keeps us in the game, keeps our head in the game. Hey everyone, this is Ian. I'm back with another video about dividend growth investing. Today I want to discuss REITs, real estate investment trusts. I thank you for your patience. I have been receiving so many great questions over the months from all of you out there, and one that has come up time and time again has been, hey Ian, what do you think about real estate investment trusts? For those that don't know, a REIT, R-E-I-T, or real estate investment trust, is a company, and I'm talking about publicly traded ones here, that is typically by definition, a pass-through entity. And so what happens with a REIT is most of the income that they earn has to be paid out in the form of dividends. And by doing this, real estate investment trusts avoid double taxation. So they're not going to be taxed at the corporate entity. The income can flow through, can go to the shareholders, and then that income is taxed at the shareholder level. Now, there are several different types of REITs out there. There are ones that are focused mainly on real estate assets, and there are mortgage REITs as well, or M-REITs. And a mortgage REIT typically focuses, as the name implies, on mortgages. I'm not going to be discussing mortgage REITs today. That's something that's outside of my sphere of expertise. I dabbled in them a long time ago as I was learning about investing. I was kind of building my strategy, and I learned some hard lessons there actually. And the one lesson I learned is, hey Ian, you probably ought to stay away from those things going forward. And so I do own one REIT in my portfolio. It's a real estate focused one. And so I want to discuss today some of the pros and cons of REITs, some of the things that one ought to be thinking about if they are considering a real estate investment trust for their dividend stock portfolio. Now, I'm going to bring out my notebook here. I jotted down a few notes. The first note is one on profession. In which industry do you work? I actually work in the commercial real estate industry. So for me, I'm really interested in diversification. And when I think about diversification, I think about it at a really high level. I think about it not only within my portfolio, but within my life. I already have a lot of eggs in the real estate basket because that's my profession. I work in the commercial real estate industry. And I'm an investor in the commercial real estate industry. So because that's my profession, because it's my focus in my dividend stock portfolio, I personally have shied away from real estate investment trusts. I've made them ancillary positions. I only own one. It's not a huge percentage of my overall pie, and that's intentional because I have to diversify within my life. Another point, do you own a home? It could be a house, single family house, it could be a condominium, maybe it's a duplex or fourplex and maybe you live in one of the units. Is that you? Well, I am personally a homeowner, and this is another reason that I am already feel like, because of my profession, because I'm a homeowner, I'm overweighted just by definition in the real estate industry. So when I'm going out in my stock portfolio and I'm choosing stock, do I really want to add a big allocation to real estate investment trusts? The answer for me has been no. And it's been because I want to diversify, and I already feel like I have so much exposure to the real estate industry through my job and through my house. And so that's just something for all of you out there to think about, whether it's because of your profession, whether it's because of your status as a homeowner. Those two things can largely affect your diversification, and there are things you might not think of in the context of your dividend stock portfolio. But I challenge everyone out there to think about those items because I think they're all related. So what else? Tax consequences. Most corporations in the United States, publicly traded, big blue chip companies out there that pay dividends, the dividends are considered qualified dividends. What a qualified dividend means is that when one receives the dividend, it's taxed at 15%. For most people, the long-term capital gains tax rate. Now that may change in the future. Laws can change, things can change, but right now, as of today, that's how it works. Let's contrast that with a real estate investment trust. A real estate investment trust, because they avoid double taxation, because they avoid the taxation at the corporate level, the individual must pay ordinary income tax rates. So this is very similar to when one receives an interest payment from a loan. Maybe they're a peer-to-peer lender. I did a video about this recently. Maybe one invests in a certificate of deposit or a high-yield savings account. Same thing, ordinary income. Now, ordinary income, the challenge with that, for it's typically a higher tax rate. And so if I were to go out, for example, and overweight in real estate investment trusts, I'm placing myself at a disadvantage, in my opinion, from a tax standpoint. Moreover, taxes are not just about the money one owes, they're about literally the tax return that one needs to prepare. Preparing a tax return with qualified dividends is really relatively easy. Preparing a tax return with real estate investment trusts can get a little bit trickier because some of the distributions, or a lot of the distributions, are typically, as I just mentioned, taxed as ordinary income, but sometimes they're also treated as return of capital. And so, in my opinion, when one is dealing with real estate investment trusts, it's going to require a little bit more help come tax season. So I don't know if you do your taxes yourself, if you hire someone to help you. There are pros and cons of each route. Whatever route one takes, taxes are going to be a little bit more complicated. Is it worth it to add that complexity to one's life, to own a real estate investment trust? It might be, especially if someone does not work in the real estate industry, does not own a home, wants some exposure to the real estate industry, likes the high dividend yields. Maybe it's worth it. That being said, it's important to take that overhead into account, because that is time that could be spent doing something else. And it just adds more complexity to one's life. What else? I like this point. This is from one of my subscribers. One of my subscribers recently mentioned, "Hey Ian, I hear what you're saying about real estate investment trusts," because I've hinted at this in some of my comments in my other videos. But he said, "I really like these real estate investment trusts because some of them pay dividends on a monthly basis." And that's pretty rare to get a dividend on a monthly basis. And what's great about it is it gives my wife and I a little bit of capital each month that we can invest. We can reinvest the dividends. It keeps us in the game, keeps our head in the game. I like this. So this is a really valid point. I have done some videos about this in the past, that in the world of investing, it's about keeping momentum, especially in dividend investing, because one is going to be in this for a long time before the dividends can cover all of one's living expenses. And so to stay in the game, having those dividends come in monthly can be very motivating and give someone a little bit of extra capital to reinvest, keep their head in the game, keep them focused on the long term. Hey, if a real estate investment trust is going to help you do that, it's going to help me do that, that alone could be a really good reason to invest in a real estate investment trust. And so I really, really like that point. I think it's a unique point. And thank you for sharing that with me. I love the comments that come in through this channel. It helps all of us come up with new, clever ideas, ways to look at dividend growth investing, because after all, we're all in this together. We are all in this to achieve financial freedom, to elevate our financial lifestyle, and to pay for things with real cash flow, real dividends that come in from dividend-paying stocks. So what else? Here's an interesting one. Interest rates right now are at historical lows. This is a good thing if one is out there looking to buy a home, secure a good mortgage rate. Great time to get a low mortgage interest rate, although home prices have started to really creep up. So it's kind of there's pros and cons of it. Real estate investment trusts do really well when interest rates are low because it's easier for a real estate investment trust to secure and invest in more property, new properties, develop new properties when financing is cheap. However, when interest rates go up, it may be more difficult to secure financing. It may be more difficult to do deals because the deals have to have more of a margin in them. The deals have to be better deals when the interest rates are high. And so if one believes that interest rates are at historical lows, that they may go up over time, that the interest rates aren't going to be here forever, it's a factor of timing. It may not be the right time to invest in real estate investment trusts. Then again, if interest rates are here to stay at these low levels, maybe it's a reasonable time. It's certainly a factor worth considering when one is partaking in anything related to real estate. What else? Good one here. Our world is changing. You cannot open a newspaper, you cannot read the news, watch the news these days without hearing about retail. Retail is changing. Stores are closing, they're filing for bankruptcy, disruptors are coming in. Some stores are doing really well who implement disruptive technologies. Fact of the matter, though, is if one does choose to invest in a real estate investment trust, consider which type of real estate one is investing in. Are you investing in multifamily apartments? Are you investing in commercial office space? Are you investing in triple net leases that lease out to long-term tenants, retail stores? Are you investing in hotels? It could be anything. Not all real estate investment trusts are equal, and so it's very important when looking at real estate investment trusts to consider macro trends as well. If one believes that there's going to be a lot of uncertainty in retail, one may have indirect exposure to retail through a real estate investment trust, and so that's something to consider. What else? If one really likes real estate, and I think a lot of people out there do because it's tangible, it's very tangible, certainly a lot more so than technology, like technology stock. You can see the real estate, you can walk into it, you can feel it, you can touch it, it's there, it's real property. And that's one of the reasons I love the real estate industry and I work in commercial real estate, developing commercial real estate. However, there's multiple ways to participate in real estate. One can go through a real estate investment trust. One can go into their local city, buy a fourplex, rent them out. One can go buy a condominium and rent it out. Or one can buy a house, live in it for a while, eventually move on and rent it out. There's many, many ways to play the real estate game. And so before jumping into a real estate investment trust, it's important to consider all of these factors and which ones align with your long-term strategy, which ones align with my long-term strategy. It's not all about looking at the stock portfolio in isolation. It's not all about looking, hey, should I allocate money in my stock portfolio to a real estate investment trust? It's about looking at the bigger picture because real estate may enter your life in a different way, and there may be other ways to invest in real estate that may have better returns than a real estate investment trust. So these are my high-level thoughts on a real estate investment trust. At the end of the day, I look at real estate investment trusts as ancillary positions in my portfolio. I own only one of them now. It's a smaller percentage of my portfolio. I don't consider it a big staple of my portfolio. So in my personal portfolio, I own over 30 stocks, but they are not all weighted equally. Some have disproportionate weighting in them. And what I'm trying to say is the real estate investment trust that I own is not one of those. It's an ancillary position. Now, what I'm saying certainly maybe work for me because of my unique position in life, may be completely different than you. You may have no intent of ever buying a home. You may have no intent of ever being a landlord. You may have no intent of ever working in the real estate industry. If someone is in those shoes, maybe it's different. Maybe it's worth considering a little bit more weighting in the real estate investment trust sector. But again, there's other factors that come into play, such as the tax consequences, the overhead on taxes, and the higher tax rate. So a lot to think about here in the world of real estate investment trusts, a lot to think about for sure. That said, these are all good things to think about. This is all related to the ultimate goal of financial freedom, which is one of the most noble goals out there because it frees up time and money to invest in passions, to do good in society, to do all kinds of cool stuff. Thank you so much for watching. My name is Ian Lopuk. I'm from ppcian.com. As a friendly disclaimer, today's video is not investment advice. I am not a licensed investment advisor. Today's video is just for your fun and entertainment. If you are interested in investing in the stock market or real estate, please go out and consult a licensed financial advisor first. I thank you so much for watching. I please ask you, if you enjoyed the video today, to give me a thumbs up, to like it, to comment, to subscribe. That is the best way that you can motivate me to make more videos, to keep contributing here to the PPC Ian channel on YouTube. And I do have a goal. Once I reach 1,000 subscribers, I will be investing in a studio in my garage, so I'll be able to film even better videos than the ones I've filmed so far. Your support means the world to me. I thank you so much for watching. I will see you in the next dividend investing video.